Hello, everyone. This is Mo from Financial Markets Online. Today's topic will be very interesting as a lot of traders tend to ignore. We're going to be discussing the foreign exchange market seasonality, where a lot of traders typically ignore that factor of the markets and they focus on other things. So what is the foreign exchange seasonality? So what is seasonality in Forex? If you ask yourself. Now, seasonality in Forex is when the markets basically repeats specific cycles, go through specific trends and patterns at a certain time of the year, and that's when you experience high liquidity and a lot of price movement. Now, what are some examples of these times of the year? What are some examples of seasonality? We've got summertime seasonality. This is when you get a lot of investors or institutions closing their positions, going on vacation, where you experience low volatility, low liquidity, and the market usually goes in a range. Now, understanding that factor of seasonality, basically you would understand the bigger picture of what the market is going to do at that time of the year. You also got year-end flows. This is basically when, towards the end of the year, a lot of investors, institutional investors, hedge funds, typically rebalance their portfolios. They adjust their positions for the next year, and that's when you typically start experiencing high volatility and large movements in the markets, which is something we've seen this year. Now, when you've got other things like holiday seasonality. Holiday seasonality such as Christmas, New Year's, Easter, so times of the year when people go on holidays, and that's when they basically close their positions and they just forget about the markets. They want to have a good time, and that's when you see the market itself doing a choppy price action. So you don't have clear direction in the markets. That's as a result of lower liquidity, and then everyone is gone on their vacations. When they come back, they basically start opening their positions once again, and you get a clear trend or a clear direction in the markets. Other things such as seasonality in the markets, central bank meetings. That is when central banks gather with each other to decide on interest rates. We've seen that happening a lot throughout this year, especially with Europe, America, Canada, Australia, where they're all increasing interest rates. Now they're at a pause. But if they decide to increase interest rates, that is going to create some sort of a shock in the market, and it will strengthen the currency pair that is getting affected by that increase. Now we've got also economic data releases that is based, such as countries with that rely a lot on imports, exports, unemployment data, GDP, inflation data. All that stuff will basically increase volatility in the markets, and that is something that you need to be aware of. So you need to kind of go on your calendar, find the days when you get unemployment data, inflation, interest rate decisions, stuff like that, mark them on your calendar, and then you'll see the increase in volatility and price movement at those days. The other thing that I wanted to talk about is cross-trade flows. So that is countries that are reliant on imports and exports. So for example, say for the UK, there are specific times of the year when we rely on importing goods from Europe. That is when we see the pound depreciating in value, and the country that we're importing from will have a surge in their currency and appreciation in their currency. So in that case will be the euro. And that is important to understand when these different cross-border trade flows are happening in the year, when there's a lot of demand for a specific currency, and when there's a lot of depreciation in another currency, a decrease in interest in that other currency. Now, while seasonality is very important to look at, while it's very important to understand what time of the year are we at when it comes to trading, we also need to know that we have to rely on technical analysis, fundamental analysis, and risk management when we're managing our portfolios. That is because not every year the cycle repeats itself, but having that in mind, you will basically understand that at this time of the year, we kind of are going to expect something like this to happen. So when you look at the chart, you basically make better decisions. Now, with seasonality, I always say, you know, keep everything in mind, but always trade what you see, not what you think. Now, I'm going to be sharing my screen since we're talking about the euro dollar. So with the euro dollar, we have to understand what are the main causes that are moving the markets. What is the rates that we had in the previous years? Which months do we expect usually growth in the euro? And in future videos, we will cover more about the seasonality of equities, the seasonality of cryptos, and different forex pairs as you guys request. So, to share my screen, we've got, that is the historical data of the euro dollar month by month. So if you go to the 1st of April 2022, you can see that this is the open, the highs, the lows, and the price where it closed. So the highs was at 1.10, the lows was at 1.04. So you can see that from the highs to the lows, we kind of have had some depreciation, but we closed at 105. Now, on May, June, and July, we had a depreciation for that year. Now, following on for 2023, which is what I'm interested in, 1st of January, we basically opened at 107. The highs was at 109. The lows was at 104. And we ended the month at 108. So that is important to understand. Now, following it month by month, now we can see a pattern, a seasonality pattern in play. Remember, that is a holiday seasonality where you got a lot of investors adjusting their portfolio, as we spoke about earlier. Going into more months in the future, we've got February, 1st of February 2023. The open was at 108, the highs was at 110, and the lows was at 105. So that is a wide range to be trading in. We closed the market at 105.76. Heading into March, we can see that the open was at 105, highs at 109, the lows was at 105, and then we got the price closing at 108. So we had an increase about 300 pips right here, month over month. And as we progress further up until July, where investors, institutional traders are going on a vacation again, where they typically close their positions, you go through a range, and you can see that based on historical data. So you can see month over month, euro have had some strength. At some points, it got to a high of 112. And that is important to understand. Now, when we go to current data, we can see that this pattern is repeating itself right now. We're currently having February close at 108. We started March at 1083. So there's a bit of 30 pips increase. Are we going to repeat the cycle where we see euro strength over the coming months, such as April, May, June, and July, which typically are good months for the euro and the pound? Now, if we're going to see that happening, that would be good for the euro and the pound. If that doesn't happen, then we trade what we see, what the market is giving us, and based on the data that is getting released by central banks. Now, going into the charts, let's go on euro dollar 2023. First of February 2023. You can see that we had a surge in prices, and then as the month progresses, we went in a small range, and then we had an increase in activity again. So we might repeat the same sort of cycle And that increase of activity have ended up, right now we're at 14th of April. Price is still surging. Bit of a correction here and there, because as you know, the market is not just going to rise to the upside. You're going to have some sort of corrections. And if we go further, you can see all these increases in prices. And then now we're getting into May. So there's a saying in the market where it says, sell May and go away. We were seeing a bit of a sell-off, followed by the month of June and July, where we have another increase in prices. We've had a large increase right here from 1st of June. We closed the month at 106. And then 17th of July, we're at 112. That is a 600 pips increase in price. And as you guys can see from the point of perspective of seasonality, we're typically having good months from March to July before investors actually go on vacation. And the price is actually depreciating. So we get a depreciation in price, or if you go back to July, and keep in mind that doesn't happen every time, so always keep that in mind. It's just the point of perspective of seasonality year over year. If you go back in time for 2022, 2021, 2020, usually the euro is having good months. So if we go on the monthly chart, now we've got right here on the monthly chart, 2023. So you've got March, bullish monthly candle, April, bullish monthly candle, sell May and go away. That's what we had here. And then you've got June and July. We had a nice move to the upside. So keeping that in mind, you basically understand that from the point of perspective of seasonality, we had an appreciation in the euro dollar at these months. Now we're back again to March. Are we going to have some sort of a surge or a decline? Now, from a seasonality point of view, as I said, March, April, June, and July are usually good months for the euro. Going back in time, that is May, March, April, May, June. You can see here, point of perspective of seasonality, 2021, we also had a surge in the euro, around 500 pips. So now you've got August, we have a depreciation in price. Going back in time, again, so February, March, April, June, and July, we've had a massive surge here in the euro demand from 107, ended July at 118, right there, and that would be around 1,100 pips. So from one seasonality to another, it varies. Now let's find an example where the euro is not having that. So right here, 2019, got February, March, April, June, and July sideways or depreciating. So it's not necessary, but we've had 3 different seasonalities where the price is giving us what we want, that surge, and we have here a downtrend, or some sort of choppy price action where the price is literally stuck within 200 pips, not giving us anything. Now going forward, right here, July, June, May, March, April, we have another surge of around 1,400 pips. So these are massive movements, guys. When it comes to the foreign exchange market, this is like getting 1,400 pips in a trade. If you're going in with 0.01 lot size, that is equivalent to $140. So the smallest position you're opening, you're making $140. So from a perspective of risk to reward, that is massive price movement to have, 1,400 pips. Now let's find another example. March, April. So March and April here, we have a surge of around 500 pips, followed by a corrective movement April, June, and July. Sorry, May, June, and July. Not that big of a decline, but then it was followed with August, September, November, towards the end of the year with another decline. Now, going forward, what do we have here? May, March, April, May, June, and July, right here. Again, we have a surge in price. Right here. We've got April. So March, April, June, and July. So June and July, we had the surge. So that is not really following our seasonality pattern as we were going on a downtrend. Right here, February, March, April, June, and July. We have a surge in price. Again, March, April, June, and July, another surge. And that's us going back in time. So you can see we've got the seasonality playing out in our favor. 1, 2, 3, 4, 5, and 6. So 6 times so we had 8 seasonalities that we looked at, and then 6 times out of 8 it played in our favor. That's the importance of trading what you're seeing, not what you're thinking. So yes, seasonality is a very good indicator to understand the strength of a specific currency at a specific time of the year. But also keep in mind that we always have to follow strict risk management to protect ourselves from any unexpected movements, and to also trade what we see, not what we think and what we predict. Anyway, this sums up our video for today. I will be doing a lot more seasonality videos on cryptos, the cable, equities in the future. Thank you very much for watching, and see you in the next one.